Hey, good afternoon, everybody. It's Chris Robinson, Robinson Act Marketing, with today's post-close grain and livestock comments for Thursday, the 23rd day. A lot of people are international politics experts. You don't have to turn too far right or left. You can't shake a stick without hitting somebody who has an opinion on what's going on in Iran. I just looked at the prices of crude oil. Crude oil is back up to 98 bucks here today. Stock market, however, seems to be wrapping its head around whatever this is, continues to hover around 50,000, and Dow, the S&P continues to sit here at 7150. If you look at 7150, we are basically at all-time highs in the S&P. So I think if a year ago somebody had written a book and said, "Hey, we're going to have this issue in the Middle East and stock market's going to like it," I think you'd probably have had a lot of people throwing rotten tomatoes at you. But here we are. A good recovery in the grain markets. I'd say the biggest swing that we had was the fact that 2 days ago the um, grain market, the soybean market in particular, went back up to that big level there, 74 and new crop beans, and then we got hammered, dropped down to 52. So 52 seems to have held for now. We did finish the day down a penny at 55 and a half. July beans finished down 4 3/4 at 74 3/4. The market feels oversold here for a while. Not to say that we can't go down more, but we'll see how we settle on Friday. The two most important days of the week right now are Monday's close and Friday's close. The stuff we have during the week is noise. So people will look at what happens in the grain markets all weekend long. We'll also get an update as to what's going on with money flow. It looks and feels like people have been lightening the load. We squeezed out probably a lot of weak longs in the crude oil, in the soybean market. Open interest has dropped there, but the funds remain bet which way? Long. They're bet long pretty much across the entire ag complex. So that is a positive if you're a producer, because you're a producer, you want higher prices, you want the speculators betting with you on higher prices. D's corn for the day up 1 1/4 cent at 483 and a half, hanging in there pretty good. Are we going to get another shot up there at 98 and a half, or possibly the contract high at 512? I certainly hope so, but you don't want to be in a situation where we find ourselves here 3 or 4 months from now and things have changed, and we're down at sub 440, which is that contract low there in D's. So defend against that. Um, I know it's not a lot. It's basically 45 cents. Um, Farmers and producers, everybody out there really needs 550 or higher corn to be feeling good about things. Um, we're not there yet. November beans, however, November beans a year ago we were at 992. So even today, after the failure at 74, to be sitting at 55 is pretty damn good. Um, the low of the year so far in January was 1050, so we're 1055, so we're $1 off that low. So hopefully these are the worst prices we get all year. Defend what you can, keep the upside open. I'm going to talk real quick about what's going on in KC wheat. The day after the last USDA report, KC wheat dropped 60 cents. People forget about that. Went from 660 down to $6. People are like, it's over, stick a fork in it. Here it is 3 days later, and suddenly with May options expiration, you had somebody puking out of position. I can tell you today, because they were covering all those shorts and pushed us to 14-month highs, and so it's a great opportunity. Yeah, it's a drought issue, but we've been hearing about the drought, for 2 or 3 weeks. This feels like something other than that. It feels like somebody covered a huge short position today in a relatively thin market. And after doing this for 30 years, I can tell you that Kansas City can be a very, very thin market if you need to move something, especially if you need to move size. So we had almost a, uh, geez, yeah, we traded all the way up to 80 from a low of 48. So, a 32-cent range on one day, up 29 cents. Feels like somebody um, exited a position. And I doubt if it was a winning position. I can tell you that much, because somebody just hit the buy button until they were out. All right, and Minneapolis wheat also up 10 cents. Chicago wheat up 11 cents, up trading at 610. The same math. All these wheat contracts had kind of peaked out in the first week of March, really the night of the war, that March 9th, when everything really spiked the first time. And so a good recovery. Can we go higher? Sure, we can go higher. You want to make sure that if you are a producer and you sold bushels, you always want to re-own them. And that's what I would say for corn and beans as well. If you're making cash sales into these markets, you don't have to spend a lot. You can go out and buy options, which keep you covered in case we do have a 2012 type market where, remember, in 2012, we didn't bottom out till the end of June. The end of May. So you have to get all the way through May. We had that June USDA report, and it was game on. So here it is, April 23rd. So there's 8 more weeks of what's going to happen with the weather. I don't know what's going to happen. I'm sure if you look on social media, you can find 10 guys that tell you we're going to have a drought. You can also find 10 guys that'll tell you that we're not going to have a drought. I have no idea. I do know that if you're selling grain and you don't want to be in a situation where you're mad if we did get a drought, re-own it, or re-own a third of it, re-own a half of it, right? That's what I would suggest doing here. And the perfect example is what just happened with the wheat. We went from $6.60 to $6. If you got mad and sold wheat on that 60-cent break, or got frustrated, and then to add insult to injury, you turn around and 2 weeks later we're back up to $6.60. It's enough to make you want to go kick a hole in the wall. And I totally get it. So good marketing is about keeping your options open. I hate that analogy, but it really is. If you've got your grain that you haven't sold, you want to keep a floor under it. You want to keep the upside open. Once you make a cash sale, if you want to prevent against seller's remorse, like someone just did. Somebody sold $6 KC July and watched it trade to $6.60 today. Someone did, or excuse me, up to $6.80. So someone is in that situation right now. So you don't have to be. And no, nobody has ESP. Nobody can tell you this is going to happen. That's insanity. That's why we hedge. We hedge because we don't know. We hedge because there is no such thing as the Grain Marketers Psychic Network. All right, guys, I'm going to wrap up real quick here with the protein complex. Just another insane, volatile day. Some of the toughest trade we've had in a long, long time. Feeder cattle, right? Very, very technical. We went down to 354 today. The next big level below that was 352. We didn't test it. We turned around and settled back above 357. Why does 357 matter? Well, it's the halfway back move of the last rally. We had gone down to 336 half. We had traded all the way up to 377 half, 357 half. Well, we've been dancing around this thing for 1, 2, 3, 4 days here now. And today we settled back above it. We'll see where we are on Friday. It's a very, very, very hard market to trade futures, even on a daily basis. So just be careful out there. June fat cattle, a $3 range. Actually, $3 range. Finished up 40 cents, 243 half. Same thing goes there as well. We had a pretty good 38% retracement of the last rally. That's held in here right now. They did test it again here today. What am I talking about? Well, it's just a retracement. You take the low from that break there in on March. Let's see, what day was that? We made our lows March 10th. March 10th, we traded 223, call it 224. And then we rallied up 3 times. We couldn't get through 252. A lot of people out there are saying, no, that's a triple top. Well, yeah, it's a triple top now because, we're a week removed and we're trading at 241. Now it's definitely a triple top. Big deal. 241.20, that was the 38% retracement. We tested that today. Again, very, very technical. And that's one of the things that I offer in my letter is I have these levels out there. I can't promise you which level is going to hold, but there are levels you need to be aware of. Lots of times we'll go there. It gives everybody a point in time to make a decision. You still have to make a decision. So it doesn't absolve you from making a decision, but these retracement levels do tend to attract a lot of interest. And on that note, I'm going to wrap it up. If you're looking for help, give me a call, 312-638-8868. If you'd like to get my daily analysis, plus my weekly podcast, plus all my recommendations, my cash show recs, my hedge recs, give me a call. RobinsonAgMarketing.com. Take care, guys. Thanks for your time.